Jake Claver says that the TPS means the XRP ledger isn't ready for world finance yet. Everyone in the XRP community went crazy over that one sentence because it answered all of their questions. Can the XRP system really handle all the money in the world? Can it really keep things running smoothly for Visa, MasterCard, or even central banks? Today we're going to break that down because new information, recent changes to the protocol, and Ripple's huge business moves paint a very different picture than what most people think. Things are moving quickly. This is not advice about money. Now, I put together something special for you if you really want to know where all of this is going and how Ripple, XRP, and tokenization are coming together to create one of the biggest changes in wealth in history. The XRP Millionaire Blueprint is the name of it, a visual breakdown, an exclusive video, and detailed documents that show how institutions are putting up this new infrastructure make up the whole guide. You'll learn how regular buyers can be ready before the market goes mainstream. It's short, visible, and made to be easy to understand. Write about it in the comment that has been saved below. Okay, let's talk about TPS, scaling, and how Ripple is slowly fixing the issue that Jake Claver brought up. People have said for years that the XRP system could handle about 1,500 transactions per second. That's quick, but not fast enough for a world where trillions of dollars are sent instantly. That limit wasn't really a hard cap. It was more of a test to see what would happen. Ripple's tech team increased the XRPL's throughput to a level that had never been seen before in 2025. In earlier tests this year, the system's output stayed steady at around 1,500 TPS, but it could spike up to 3,400 TPS when it was under a lot of stress. And that's before sidechains or subnets are even turned on. They've made it easier for validators to work together and for ledgers to close. It's work at the very high level of design that cuts down on consensus latency, speeds up transaction validation, and keeps the 5-second finality. Basically, they're opening more than one validated travel lane so that all of them can process at the same time. It's even more impressive that they're doing this without lowering the energy economy. The ledger's latency stays below 5 seconds per transaction, even when institutions try it under a lot of stress. But that was just a warm-up. When Matt Hamilton worked at Ripple, he helped build the XRPL. He confirmed something very important. The ledger can grow indefinitely when you mix payment channels, sidechains, and something called an implicit or explicit subnet. Now, this is where things get interesting. Bob Way is an old Ripple insider who has a patent for a subnet system made for the XRP platform. If that subnet is put in place, which looks like the foundations are being made right now, XRP's ability to scale goes from thousands of TPS to millions of TPS. That's where MasterCard and Visa come in, plus more. Behind the scenes, Ripple has been quietly getting ready for this. XRP is being seen as a bridge exchange by many, but what's really happening is much bigger. As time goes on, the XRP ledger will become the core of a global payment layer. When the multi-purpose token standard, MPT, came out this year, it was the biggest step forward it had ever been. When it goes live on October 2025, MPT will be the biggest change to the ledger since NFTs were added in XLS20. But MPT doesn't just deal with NFTs. It builds support for both fungible and non-fungible assets right into the core protocol of the XRP database. That means there's no need for smart contracts from outside sources, extra scripts, or extra bulk. This alone makes a big difference in speed. It is now possible for every new token, bond, or digital asset released on XRPL to run natively, just like XRP itself. RippleX's own tests showed that speed stayed stable even when a lot of MPTs were issued. Why? No special token logic is used in MPT transactions, which means the network doesn't have to work as slowly. They are handled with the same simple structure as regular XRP transfers. That's really important. It keeps fees very low, speeds very high, and makes sure that every action still uses a very small amount of XRP. This deflationary structure makes spam attacks almost impossible. This is only the first step. Engineers at Ripple are already looking into private MPTs. These use zero-knowledge rollups to keep transaction data safe while making the system even more scalable. Once this is put in place, it will not only make XRPL scalable, but it will also work with institutions like central banks that need privacy for interbank payments. Let's take a step back because what Ripple does on the business side is exactly the same as what they do on the technology side. What Brad Garlinghouse said just blew my mind. By buying G Treasury, a huge global player with over 2,000 pre-configured connections to important banks and financial institutions around the world, Ripple has officially entered the $120 trillion corporate treasury market. There is no small part of fintech that G Treasury isn't. It's a full-on establishment network. There will be direct API links, Swift compatibility, and host-to-host integrations with Bank of America, JP Morgan, HSBC, Deutsche Bank, ANZ, BNP Paribas, and hundreds more of the biggest banks in the world. Ripple now has access to more than 13,000 banks in 160 countries right away thanks to this purchase. This is Ripple's way of saying, we're no longer just a crypto company. We're making the tracks for the next wave of money. Ripple's president, Monica Long, said it all very well. She told them that Ripple and G Treasury will now help businesses move money more quickly, cheaply, and around the clock. They will also help businesses grow and handle the money they have sitting around. It's important to note that term, unlocking trapped capital, because it's the same $120 trillion in idle cash that governments around the world have been trying to move in the best way for decades. Ripple has now become the main part of that system. Take a moment to think about that. Thousands of businesses are now linked together through Ripple's network, which uses infrastructure that works with SWIFT and is driven by blockchain settlement. Tokenized liquidity and standard finance can now work together in a way that is easier to understand. This is just an idea. There is already a tech stack, an API design, and connections between institutions. This was made clear by Brad Garlinghouse himself at DC FinTech Week, when he said that crypto should follow the same rules for AML, KYC, and OFAC as traditional banking. But they should also have the same access to things like a Fed master account. His point was easy to understand. It has to work both ways for officials to make things fair. Right now, Ripple is putting in place the compliance framework that will make that point impossible to argue with. Europe's banking leaders are setting strict rules at the same time that Ripple is expanding its reach. The head of the European Central Bank, Christine Lagarde, made it clear that Bitcoin will not be part of the EU's central bank funds. Why? For this reason, funds need to be easily accessible, safe, and not linked to any risks of money laundering. This makes you wonder what other digital product would meet those needs if not Bitcoin. What can move right away, settle quickly, and connect different currencies? There aren't many good options, and XRP is right at the top of the list. The ECB's comment had an impact on more than just Bitcoin. It also set the tone for how institutions will use cryptocurrencies in the future. Right now, speculation isn't the main topic. It's payment infrastructure, interoperability, and following the rules. That's where Ripple's environment really shines. It's not that the XRP system wants to replace banks. It's just making them better. What's coming next with subnets and tokens that can be used for more than one thing could make XRPL as popular as Visa or MasterCard. Not as competitors, but as the tail that runs behind them and no one can see. Insiders say this is the last step before utility-driven usage takes off. When you add in G Treasury's institutional network and the upcoming rollout of Subnet technology, you can see why. How much further can Ripple take this before the rest of the banking world figures out what's going on? That's why we see Ripple not only making noise, but also putting itself in all the right places. They can now use the same technology that global banks do because they bought G Treasury. SWIFT host-to-host systems and Treasury APIs have been used in business for many years. They can still connect to on-chain funding, though, thanks to the XRP ledger. From messaging to payment, this is the next step. SWIFT has been the main way that money moves between countries for decades, moving trillions of dollars every day. However, it only moves messages and not money. Ripple wants to get rid of that old relay system and replace it with real-time settlement backed by blockchain verification and XRP as the neutral bridge currency. And the fact that G Treasury already works with SWIFT makes this even more important. Ripple can now connect enterprise-level systems to on-chain payment without having to start from scratch and rebuild the rails. This is the bridge that crypto fans, banks, businesses, and regulators have been waiting for. They need a system that is compliant, can be audited, and works instantly with the infrastructure they already trust. And Ripple has picked the right time. As the world moves toward tokenized money, organizations all over the world, from BlackRock to the World Bank, are looking into faster ways to digitize and move assets. In a quiet move, Ripple became the link between everything. Over $120 trillion is stuck in old systems in the market. This is money that companies don't need, but is sitting in their funds because moving it across borders is too expensive or takes too long. When used with G Treasury, Ripple's system can make that liquidity available. Imagine if thousands of businesses could move money in seconds instead of days, with almost no fees, and still follow the rules. This is what Ripple is making. Let's talk about scale again, because as demand grows around the world, XRP will have to handle millions of transactions per second, not thousands. This is where subnets come in. Subnets are like private highways that link to the main XRP network. They can handle transactions directly for certain institutions or areas while still connecting to the main ledger to settle everything. Because of this structure, XRP can grow indefinitely. This is because transactions don't have to compete for room on one chain. Instead, they can run safely side by side. Bob Way's patent on subnet design isn't just a thought experiment. It was made just for this purpose, so XRPL can handle settlement flows on a world scale. Once this is set up, organizations like MasterCard, Visa, or even central banks could use subnet instances of the XRPL. These instances would be able to talk to each other and work together, but they would be customized to meet their specific legal and throughput needs. Don't forget that speed is more important than flexibility. Researchers at Ripple have shown that they can keep settlement times below 5 seconds, even when thousands of transfers happen every second. With subnet design, that speed will be increased many times over. This will make it possible for a financial web to handle all kinds of value, including payments, tokenized securities, CBDCs, stablecoins, real estate titles, and even contracts run by AI. When it comes to CBDCs, Ripple already has a number of central banks trying their digital currency infrastructure on its platform. Because it's not just about making digital currencies, it's also about making them work with each other. The XRP ledger's privacy changes and MPT integration make it perfect for this use case. That's what will happen if each country makes its own digital currency on its own system, more silos. But Ripple's technology makes it possible for those CBDCs to settle quickly across networks. The real power lies in being able to work together at the protocol level. It could not be a better time. The digital Europilot is almost done at the European Central Bank. The Bank of England is looking into its digital pound, and the IMF is talking about multi-CBDC bridges in a very public way. Ethereum and other blockchains are trying out tokenization schemes, but the XRP ledger is only interested in making settlements as quickly as possible. That's what makes organizations notice it. It's not about hype. It's about loyalty and following the rules. Let's go back to what Brad Garlinghouse said at DC FinTech Week. When he said that crypto should have the same access to financial infrastructure as FedMaster accounts, he wasn't just making fun of lawmakers. He was letting everyone know that Ripple was ready to join the core of traditional finance. If Ripple can connect to technology at the Federal Reserve or similar global systems, it will be an important part of the flow of money around the world. At that point, XRP is no longer seen as a speculative currency, but as collateral for infrastructure. And the market is going in this exact direction. Tokenizing everything, from private equity to corporate bonds, is now a top concern for institutions around the world. At the moment, BlackRock, Citi, JP Morgan, and the BIS are all testing out tokenized asset networks. Ripple works ideally with this ecosystem because it lets these assets move around the world in real time and in a way that is compliant. It's not a rival, it's the settlement layer that can link them all together. You can see the change coming already. No longer do institutions ask which coin will go up. They want to know what kind of technology can move real-world things quickly, safely, and in large numbers. That's what makes XRP unique. Ethereum is strong, but it's crowded. Gas fees can reach tens or even hundreds of dollars per transaction during events with a lot of people. The XRP system keeps transaction costs very low, even when it's under a lot of stress. Businesses and banks want speed and reliability. Just like you said, it's not just people in the West who are aware of this. Ripple is becoming more popular in Latin America, the Middle East, and Asia. A lot of countries in these areas are looking at how to use Ripple's CBDC tool for their central banks. These pilots are real people. They're going now. The idea is easy to understand. Join the payment systems of different countries into a single global system so that money can move quickly between countries. That's what Ripple is planning for the future. In the business world, Ripple is now ready to fight with big names like JP Morgan's base for Onyx. With G Treasury, Ripple has the tools it needs to do just that: a huge customer base, built-in bank connections, and a cash management system that is tough enough for big businesses. Things that Onyx did for JP Ripple can now do for the rest of the world's corporations what Morgan did for his clients, but with payment that is faster, cheaper, and built on the blockchain. Also, think about what that means in a big picture sense. JP Morgan's method still depends a lot on limited access and internal liquidity, but Ripple's system can easily work with other systems. XRP is the link between different currencies, so any organization can connect and settle in real time. It's hard to say enough good things about that structural edge. Companies will never go back to settlements that are slow, hard to track, and cost a lot of money. Tokenization and settlement tests are being tried out by even big payment networks like Visa and MasterCard. But a lot of those depend on private blockchains or settings with limited access that don't work well with each other. Ripple's Subnet and sidechain are designed to connect those private networks directly to the main XRPL network. This makes a smooth mix of public trust and institutional control. Let's connect this to what Christine Lagarde said about the funds held by central banks. The European Central Bank, ECB, says it won't accept Bitcoin because of its volatility and worries about money laundering. However, they're really saying that they're open to regulated digital assets that meet their compliance and liquidity standards. Those things are all true of XRP, with its open set of validators, regulated structure, and low energy use. It's not about getting rid of paper. It has to do with making cash move better. And confluence is the main story here. Cryptocurrency and regular money are no longer two different things. Crypto is the next step in the evolution of money. Even the CEO of Robinhood said it. It's the next layer of infrastructure after paper and before mainframes in the cloud. This is where business logic and value exchange come together. In that world, assets, payments, and data are all kept on ledgers that can talk to each other. The clear role of Ripple in that change is to make the system work well. That's why the question is no longer will XRP be used, but when will it be fully integrated? From G-Treasury to Subnet research to activating MPT, every big move Ripple makes points to getting ready. You should be ready for real-world traffic, global liquidity, and the age of tokenized finance. And right now, while everyone is arguing about price charts, a complete redesign of how values move around the world is taking place. The companies that get this and quietly add Ripple tech to their systems are getting ready for the next era of finance. Now that Ripple is built into corporate treasury systems, linked to SWIFT, and ready to handle large amounts of transactions at the institutional level, the next step is to place itself politically, because policy and finances always meet at the top levels. And Ripple has already been asked to join those groups. Brad Garlinghouse went to the White House ballroom fundraising dinner this week. It was a private event where politicians, big businesses, and donors all came together. The description may make it sound like any other fancy event, but here's what makes it important. Every business there promised to give between $1 million and $25 million to the campaign. It has nothing to do with politics. It's about getting in. You can listen in on the discussions that will shape the next era of money. When leaders from Ripple show up to these kinds of events, it's clear that they're no longer just crypto outsiders. They are at the same table as the people who made global banking possible. Now, Ripple is focusing on connecting what regulators know with what technology can do. Retail hype won't get a lot of people to buy in. The company knows. It happens when institutions work together, regulators trust each other, and countries work together. Getting governments, lawmakers, and financial institutions on the same page about what digital liquidity can really do is where Ripple is putting most of its efforts. The European Central Bank is also making it clear that only digital assets that are legal, safe, and energy efficient will be used in future reserves. Christine Lagarde made it clear. Because Bitcoin is volatile and could be used for illegal activities, central banks will not keep it in their holdings. Even though that one remark shocked the market, it really only confirmed something bigger. Digital assets are being thought about by central banks. They are only choosing those who meet certain standards set by the institution. What kind of tool does the job? XRP has the ability to be easily bought and sold, to use energy efficiently, to follow rules, and to work with other cryptocurrencies. It's quick, easy to track, and can be checked. And it's backed by a company that's building safe connections to world banks. It's already being used in pilot projects for CBDCs. The pieces fit together. On the other hand, companies like Robinhood are saying out loud what many people already think, that crypto isn't just a layer of speculation. It is the next level of infrastructure for the world's financial system. The CEO of Robinhood said it best. After cloud computing, crypto is the next step. All business logic, exchanges, loans, payments, and asset transfers happen there. It's a shared system that can be programmed. There is no difference between stocks, bonds, and coins in that kind of future. All of them use ledgers that can be shared. And settlement speed is everything when those ledgers talk to each other. That's where the XRP system really shines. It wasn't made to work with meme coins or NFTs. It was made so that big money could flow through it. Sub 5-second settlement, proof that is based on facts and fees that are almost zero. It's not flashy. It is fundamental, the kind of hardware that you don't see until it's all over the place. Take a look at where we're going. The IMF is working on models to allow CBDCs to work together across borders. Multi-CBDC platforms are being tested by the BIS. BlackRock is making cash tokens. Citi is making payments into tokens. And Ripple is connecting to systems that move trillions of dollars every day. It's clear when you put all those pieces together. Ripple is building the link that was missing between standard banking systems and global liquidity that is based on tokens. I find it even more interesting that companies are moving toward blockchain instead of away from it because of fear and uncertainty in the markets. When there are problems with the world's money supply, governments and banks look for faster, better ways to move money. It's no longer just a tech project to use blockchain. It's a technical answer. And Ripple's ledger, which was built from the ground up to handle payments and settlement, is the most real-world example we have of that answer. Finally, add G-Treasury's infrastructure on top of that. This is a network that already includes over 160 countries, 13,000 banks, and 1,000 big clients. This is Ripple's quick global reach. All of this is happening at the same time that Ripple keeps putting an emphasis on safety, sustainability, and working together with regulators. Speed, security, and legitimacy are the three things that every organization wants. This balance between new ideas, following the rules, and going global is what makes Ripple stand out. No longer is it about becoming the next Bitcoin or Ethereum. It's about being the web that holds the digital banking world together. At some point, every bank, government, company, treasury, and tokenized asset will need a safe way to send money across networks right away. That's what Ripple does. It's the background noise that keeps everything running smoothly. It's no longer just idea either. We're seeing how it goes. Subnets are being built, MPT is being used, G-Treasury is being merged, and Ripple executives are meeting with the biggest political and financial leaders in the world. That's not a lie. That's the part that no one sees until it's built. The infrastructure. Remember this the next time someone says XRP isn't ready for global finance. Things are already moving in that direction. Ripple isn't getting ready for a time when it's just one of many blockchain players. It is getting ready for a time when it is the link between different banking systems and the core layer that makes them work. The world doesn't need 10,000 pieces in the end. Everyone needs to be able to trust one global payment network that is quick, effective, interoperable, and good with rules. And Ripple is building that right now, one step at a time, one merger at a time, one partner at a time. The change has already begun. It will all fall into place when global banking, tokenized assets, and instant settlement all come together, and XRP will be at the center of that new system. I explain everything in detail in the XRP Millionaire Blueprint if you want to know how Ripple's infrastructure, the XRP ledger, and institutional usage all fit into one of the biggest changes in money we'll ever see. It comes with a document, an infographic, a thorough video walkthrough, and other things that are meant to help you see the whole roadmap clearly and with confidence. It's in the pinned comment below right now.